Hello, everybody. Good afternoon. Good afternoon to my European friends. Good evening to my Asian Oceania friends. Good morning to my North-South American friends. Hope you're all doing very well. Another timely start as usual. It's 1:30 here, Riga. 11:30 London. Quite a bit late. Try to be at least 2 hours earlier, typically, but lots of numbers. Just keep running, more numbers as we dip here. Gonna do a Bitcoin analysis on different types of regressions, okay? I've stayed away from the quantile regression for a while. No particular reason, just for those of you that might have seen Plan C or the Bitcoin researcher as well, he's done them on his website. You can download those regressions for free and plot them if you want. It's a bit more complicated of a run. I mean, you can do it very easily in Python or something, but I like sticking with the ordinary least squares. And that's mostly what my regressions have been on. But I just want to show you the difference. And as well, a lot of people have been asking me, how do we know if this curve will ever break for Bitcoin, or what does it look like when it's broken? And the best way to do that is to compare a different curve to see how that looks. Okay, so we can do that in a variety of ways. So here I'm going to show you, this is nothing new under the sun, just the old power curve. All right, this is as I calculate it. Quite a bit cheap relative to, if you call that fair value. And I will go back to my multiples on the OLS, but I'm not going to do that at the moment. We're going to do the quantile regression now as well. Okay, so the quantile is basically running, you look at the data, and then you run a certain segment of that data, you run a regression. Okay, and you can piece these out in different quantiles, right? So the typical way, and you've probably seen this a lot, is just to do 11 segments. It's actually 10 segments, but 11 lines. All right, so what you'll get, we could do again the 0th and the 100th. Now notice this looks a lot smoother than mine. Okay, so there's no multiple I'm fixing to the OLS or whatever. This is just 3 different regressions. Right? And you actually don't do the 100th, but it's like the 99th.99. And I've noticed, Plan C, Cena, they're working very hard to get just the very last point. So this is actually higher than the 99.999. It's like a couple more nines after that, and you get this line very close to it. So they really try to make, they really try to make every piece work. Both like this piece, this. I'm not doing that. I'm just doing a simple quantile. All right. Also, a lot of people have decided that about the 5 percentile quantile is about where most of the the support in Bitcoin's price lies. Okay, so if we do that, this is the 10th. I'm not showing the 5th, but you can see that, I think APSK does this. You can see that, so this is the 10th, but if you put the 5th a little bit lower, it's very, very rare, all right, where it punches below. Did it here? This definitely went below the 5th. And here's going to be pretty, the 5th would be even lower. Actually, this 0 width looks pretty good. And then you run more math from that. Good morning, Bitcoin Polska. Love that name. Hope our Polish Bitcoin friends are doing well in these crazy days. Greetings from the Baltics. Okay, but basically what we can do with the quantiles is we can layer them out. All right, and what you're seeing here now is literally 10 different slices that have different R squareds and they have different coefficients. It's unlike what I do, where I do multiples of the OLS, typically. All right, but you can get these nice smooth lines that generally catch or look sort of better with the data. Another observation, which again I need to do more of, and I thought about doing this more of after actually talking with Stephen last week, because he said Bitcoin is trend reverting, and you can see that here is if we even take away the OLS, like look where these lines are really bunched up. They're not bunched up here around the 8/900th. They're not bunched here. Here maybe yes. Not here. Not here. You could even see maybe not here. This is where it starts to bunch up. And you can do more math and more math to see where mostly it is. Even the OLS is higher than where it typically is. OLS turns out to be about 66% of the time, 2/3 of the time. But Bitcoin has shown to be a little, and actually you can see even more when we sort of zoom out. It's like the 70th, 60th. From this level, you can see some interesting, like the lines that seem most close together represent the best fit. And this is also helpful, so I'm happy to show this more. But the projections look a little bit wacky when you go further out. I'll show you. So let's just look where we are. All right, again, if we assume that the 10th to the median, the 50th percentile is the most common. All right. We're now below the 30th percentile in $BTC. Really, really cheap. But also, to be fair, quite the most of the action here is where the trend actually is. This is what Stephen meant when he said it's trend reverting. Right, this is just too far away. It doesn't happen much, so there's more depth. There's more white space between the lines, basically. So let's look at this. And we could show the 0 if you want to be scared, but let's not. All right. 10th percentile, that's $69,000 Bitcoin. Take it out to end of the year. Whoops, sorry. End of the year, $72,000 Bitcoin. So again, in quantile regression terms, most of the data is here. I need to get a mode calculation for you. I don't have it, but you can just see it with your eyes, right? You can just see it. Actually, it looks pretty decent even here too, but when you zoom out, it looks a little bit farther back here. Anyway, let's keep all of it. From the 10th to the 70th, okay? So let's now use this, and let's go out to the end of the decade as our sort of baseline, all right? I'd say pretty conservative, but baseline pricing by the end of the decade. There you go. Now notice my OLS is right about the 70th. All right, put the OLS back on. It's just a different, it's a different, OLS is more like the mean, but it's slightly different, but it's all of these have different coefficients. You just have to calculate them out. And so this will go up and down with the data. So if you look at all of these, including the OLS, you're looking at $340,000 Bitcoin to $550 by the end of the decade, or start of the new, depending on how you want to look at the year 2030. So again, no matter what you're feeling right now with these dips, and I understand it can be nerve-wracking, especially if you might have been thinking about Christmas presents or some cash, like getting into fiat cash a little bit at the end of the year, assuming there was going to be a pump, whatever. You still got to utilize this power curve in the long term to think about it. And then for fun, all right, let's look at the higher levels, okay? And we'll compare this. I'm going to go back to the curve I always have shown you, which is a multiple of this, which is a different calculation. But let's put the 80th, 90th, and then 100th, which looks, again, you can see how rare these levels are. Best chance, not a likely chance, $1 million by 2030. Not a likely chance, though. Then a 90th percentile, 715K, 80th, 568. So look at how there's the interesting thing is the compression there, right? And if we went to the end of the year, this is also going to be interesting, right? Let's go to the end of the year using the quantile analysis. The 90th percentile is 196. All right, so this is actually more conservative than my 250, which I've been talking about a long time, which is 2x the trend. And I'll try to harmonize all that in a second, but I just want to show you the difference. And I know everybody and their mother has canceled the pump by year end, but let's see. I'm not calling for it, but I just still not calling it off. So here's our levels. Could it go down to the 0th very soon? Maybe. But the likelihood is quite small. This is a more visually appealing model. I certainly agree. Right? Because you catch most of the tops. And again, you can work harder like Plan C's really tried to do. I'm just doing a simple quantile. It's not even, and it looks really good. I mean, you just run the quantile, you see how it looks, you get your ranges, and then you can make your decision about, buy a hodl or maybe even sell a bit if you want, or write puts, buy puts. Okay, so here's the quantile regression as well as the OLS for the power curve. Now, just for your information, let's take it out further and see how it's kind of weird. Notice how they compress. So I can get this to stick for you. It's fine. There we go. Notice how they compress and they get like very close together, and they even start to be like weird on the numbers, right? So the top level now is not even the highest dollar amount. The bottom level is the highest dollar amount. It's kind of interesting, right? And then the OLS is what it is. In the long term, I would rely more on the OLS personally here, but I'm not a hardcore physicist. I'm just a applied stats guy. I would rely on that play button, the top line more. And you see that it's closer to the median. In fact, the median is the highest value, 24.7. Okay, so it looks weirder. They'll cross at different intervals. Looks kind of weird. I'll come back to my model and you'll see, like the model I've been showing you guys most of the time. All right, so that's Bitcoin as power with this quantile regression, which I should show more, I think. Now, let's shoehorn in the exponential as a quantile regression. Okay, so I've shown this many times with many different charts. If you just ran an exponential trend on the life of Bitcoin, you'll get this. R squared is worse by 10 percentage points, by 10 points. And the fit hasn't touched it since 2022. We can say with absolute scientific certainty that Bitcoin is not following an exponential trend. Okay, it's following a power trend. So an exponential trend, straight line on log scale. Now let's do the quantile regression as an exponential. Let's shoehorn these in and see how these look. I'm going to start with the 0th and I'm going to start with the 100th. Right away, you should be seeing more alarm bells, red flags. All right. We're just running the data. I'm not doing anything fancy. But what this does is try to take, it's running individual sort of OLSs, individual regressions on just a clump of the most extreme data at any time. And what you see here is wackiness. It doesn't take much to see the wackiness, right? The OLS crosses the 100th percentile right here, and then the 0th, or it's really like the 0.0001 percentile, crosses the 100th 3 years from now. 2.5 years from now, less. Complete wackiness. That's a broken model. That's a model that's not working. I don't even have to show you the other ones. This is what I mean when I say take comfort in how Bitcoin is getting adopted like a network, like a power curve. We're not done here. I'll show you gold in a second, which works the opposite. I'll take off here. All right. There's no way one can look at this chart with any mathematical rigor and say that this is showing the reality of Bitcoin. You got the high percentiles crossing over with the low percentile quantiles. It's the same thing. Percentile is just a one. Quantile is more on to talk about the segment, but you can also say percentiles. It's the same thing. So that just look at the wackiness there, and it starts in 2028, or what's the word to say? It flips. It's just not a good portrayer of what Bitcoin does. To catch the early action from Bitcoin Pizza Day on, you got to be down here. But if you're going to go exponential, you got to be a straight line on log scale. So you can't look at, Bitcoin Pizza Day pricing and say it's anything but exponential. Actually, it's quite interesting. It's right on it. Bitcoin Pizza Day had the right price. Laszlo had the right price compared to today's price. You can say that. But it has nothing to do with anything else, right? It doesn't intersect anywhere. That's kind of funny, actually. So Laszlo's price turned out to be the worst option, And if you do the worst option, try to shoehorn that into today's price, we're right there on exponential. 10th percent. All the way here. This is why I'm telling you, when you see all these TradingView analysts that are drawing the lines and drawing the wicks and connecting the dots, they're doing it with straight lines on log scale, most likely. And it's just, Bitcoin is not working that way. You can draw straight lines for a time, for a segment. All right, but it's gonna fall off it. Either fall off it or rise above it. Let's take the 0th off. Right. The 50th already looks wacky. So if I could show you anything that kind of fit, it'd be something like this. Right? Of course, it doesn't catch anything about what happened here. This is why Bitcoin is not an exponential asset, which is very rare in the financial world. Doesn't happen in the TradFi world. And then let's also ask how that actually makes sense to today, to a possible price in the future. Right? Well, the range, let's go to the end of the decade again, or start of the next, end of 2030, let's go. That's a big gap. 10.6 million to 4.3 million. And notice how the lower percentile will give you a higher number. And then we just can confuse it by putting in all the rest. This is, this is wackiness. Let's go back and look at the power curve. Of course, the power curve is going to have a range. All right, but look at that range. It's less bombastic figures, right? But it's showing what Bitcoin is doing. These figures are a lot closer together than 10 million to 4 million. So I know it sounds like I'm a broken record on some of this, showing these, but I just want to continue to remind people that this is something to really take comfort in, especially in drawdowns like this. All right, let's take off the noise. Let's take off some of the hype. Let's take off the OLS. Let's take off the worst case. There you go. There's our range. Bitcoin in the last month, by the way, has hit almost all of these prices, except for the bottom two, that is 1 and 2, and the top one, that is 7. This looks pretty good, though. So again, if we assume that this is the sort of the mode, the most consistent observations, and we go out to the end of the decade, these aren't like retire tomorrow types of numbers, but they all can comport with reality. All right. Now, having said all that, let's flip it around and let's look at an exponential asset, specifically a hard asset, specifically gold. I've shown this many times. Gold started to freely float, as everybody knows, in 1971. I'm going to 1969. just to get the whole decade. You could start it wherever. I mean, you could start at 72, 74, whatever, but started in August 1971. And you see the price is already creeping up, right? It's 35 bucks, 1969. It was already going up and down in 68. Oops. But you see the price flipping around. Okay, so let's do the, now this is an exponential, all right? The giveaway is it's a straight line on a log scale, so it's an exponential function. That's what compound growth means. Doubling time is constant, unlike in Bitcoin where doubling time increases or the rate of growth decreases. Now let's look at the extremes, the 0th and the 100th. See some interesting things. Looks pretty good. I'm not saying that, you know, it has to repeat. By the way, if I would have drawn this, let's say at the start of this year, right, this line would have been lower. So the stats change. I mean, it's just like, it's not a crime to change it. This red line at the top line would have been lower because you would have seen that, okay, until then, there was no extreme pump. It would have been much lower. It probably would have even kissed this line if we just did the data from the start of this year. But since we had this pump, you know, it has to include it. 90th catches you much more. 10th on the other side, you see the different slopes. This is what a quantile regression does. So let's even zero in and take off the most extremes. Let's just look at this right now. So we're extremely rare if we consider this this pump. Doesn't mean it can't go higher, but we're in extremely, extremely rare moves for gold. And all of these figures by the end of not just the decade, but 2050, Peter Schiff wouldn't be happy with this return over the next 20 years, 25 years. All right, now let's look at gold as a power. All right. Now I've shown this a few different ways. This, I actually had Python draw all this. Let me go back to ones where I've manually calculated. It's actually not, it's not too terrible of the R-squared difference. You see 76% here, the OLS 79%. Let me show you one that I started a little bit later and did manually. They just, you know, you get slight differences depending on your start dates and everything else. One second. I'll come back to that. Anyway, here it's clear. The best fitting trend for gold is a straight line. This, the power, where again, you start faster, you stabilize. Looks worse. Right? We haven't hit the trend line or even sort of close to it since 2007. Whereas again, go back to gold, it's just more, you know, it just makes more sense. this taking so long to load? 1 second. But we'll do the okay, we'll do the quantiles. Sorry for the dead time there. Now let's start with the 0th and the 100th. All right, so you can catch them. You can make it work. Your predictions will be even worse, right? Because it's a declining rate of growth is what this means. It might seem at first glance like it's kind of okay. But gold moves just like the stock market, just like the bond market. It's much more clear that it's exponential. I'll show you finally a slightly later start date, which I think is it's 1971. Here's your power. Here it comes. This is a different one I calculated manually. So notice how my R squared in Python was 76%. This is with the quantiles. But the OLS, this is OLS, is 76%. And the manual power starting in 1971 is even worse, 70%. So again, you got to use the eye test a little bit. How many times does it intersect? Does it just look like it's working that way? And so we can go on and draw the quantiles here. But overall, R squared is not as good, even though it's kind of deceptively close, at least here. But using the eye test, you can just see that it's not catching all moves. Whereas this does. Right? So that's how it looks. I'll keep showing you more stocks, the stock market, whatever. But gold, just like any other asset, financial asset, grows exponentially. And the main reason, my understanding and my sort of reading of history, it's due to compound interest. It's due to the credit system itself. You have to, if they say credit is the lifeblood of the economy, and I'm not being cynical here about fractional reserve banking or whatever, it's those of you who followed me long enough know that I don't try to judge too quickly when you talk about a topic. Unless, of course, it's Russian invasion of Ukraine, then it's black and white. But yes, the system is very unstable because of credit, but also the system has always worked that way, even from ancient times. Sidney Homer talked about this. You know, credit doesn't need any barter. It doesn't need any money. You can do credit. You can promise your uncle you'll pay him back for the crop next year if he lets you use his plow. You don't need anything to do credit, and that's existed for millennia. Credit also works in advanced economies, but credit is inherently exponential. It's an exponential function. So due to the nature of compound interest, more and more interest every year, you'll get this inherently and indeed, at times, unstable function of a straight line on log scale. Bitcoin doesn't do that. All right, Bitcoin has this interesting, beautiful, sustainable power curve. I started late and I had too many charts or too many, I guess, different things to do this morning. So not going to show too much, but if you want to look at any other charts, let me know. Bottom line, Bitcoin is power, not exponential. Gold is exponential, not power, as is every other financial asset. And then also, if you want to, depending on how you measure it, the power the R-squared is even worse in power. And now let's look at mine. This is what I've shown you guys for years, literally. I do these multiples, right? And that's because I showed how the trend evolved. And I think it's helpful for a quick and dirty way. It's probably true at the end of the day, like this is statistically more accurate. But I like this a lot for simplicity, because now you know at any point in time where or above or under the power curve, the OLS, the price has ever been. It's never in the history of Bitcoin been more than 7.8x the trend, and it's never been worse than 0.1x the trend. All right. And where are we right now? Not too bad. 0.8, somewhere between 0.6 and 0.8, 0.7. We're 70% the trend, okay? But to do this, to say it this way, as I've always said to you guys, you have to have these wiggly lines in the past. You can't do the smooth lines. So that's why I do it this way. You also get a wider variation in the future, right? But if you take away the extremes, it's not too bad. So the 10th and the 90th, it's a wide range, indeed. A lot wider than I showed you in the QR, Quantile regression. 7 million on the downside and 46 million on the upside. Here's the QR, the most common ones, right? It's a difference. 16 million to 24 million. But over the, let's say, course of the near term, I think it's more it's a quick and dirty way to say it. So what I still think is possible, and I'm not a gambler, guys, so it's just, don't say that I'm betting this at all. But, we've had these 2x, the trend pumps, no matter where we've been, every 4 years. I know everybody's put the death knell in the coffin of this, but I'll declare it dead when it's passed. But we still got a month and a half, still got 2 more months, so let's see. 2x the trend is exciting 250K. Although I certainly admit the probability is falling drastically by the day. Let's wait till January to declare the cycle completely dead. Good morning, Kurt. Again, I'm not a caller of these things. I wish I could tell you. We can say with 70% certainty, according to the Quantile method, that 80K is the bottom. That's the inverse of what you see, right? So the 30 percentile, we pierced it. So we can say statistically with 70% certainty, that's the bottom. 70% is not 100%. So you guys know I'm from the Midwest originally. I'm never going to give a hard number for anybody. Do what you need to do, but 70% of the time we've been in this range, not below it. So take that information for what it's worth. Yeah. And this is certainly the more accurate statistical way. Mine is true. It's just based on a different metric. It's based on multiples. So it's just slightly different. So if you do my way, it's less. It's actually less good counting on the upside. So my way would say only 50, where like between 45 50, right? So my way would say 55%, closer to 60. 60% likely that this would be the lowest we would see at this moment. Not as good, actually. So that I would rely on this number actually as a stronger statistical. This is more of a fine-tooth comb. Pretty good. I mean, you can see why the price is, typically at these levels, 70% of the time. And if we go to the 80th percentile, which again is just even stronger statistical support, that's only 77K. And that number, let's say, 3 months from now, 87K. So I did not do this for gold yet. I need to do it for gold. Because that's really cheap. Amazingly cheap, as we talked about. So I'll show these more. I stayed away from it because I like calculating everything manually, but it's too much to do this manually. You have to just do it in Python or a statistical program. Every line here is different. It's unique. You just need a stats program to run it. Let's see what else I can show you. Sorry for the dead time. behind on a lot of stuff. I got to get the some other analysis for some other investors as well today. But I have the money supply coming, right? So it's not really going to show us too much for the third quarter. You know, you're still kind of flat basically, but presumably fourth quarter will be up, which I know people want to see it up because then you presume that the price will also be up. Let me know if you want an update on any of the other charts. As usual, I keep getting people to ask if you can play around with these on the site. It's just there's so much data here. It's not it's not easy to just throw it up after running it. So, but I hope to soon. And also, I'm keeping in mind that people have looking at stuff on their phones often. I'm trying to think of ways to get like maybe snapshots so you can just sort of you can see the close-up version, the far away version just quickly, with the touch of a button. That would be better. But you got to bear with me on that. I've been thinking about this for years, and I have to say some of these AIs are helping, but it still takes time. We can look at some on-chain data. I'm really slow today. Sorry, guys. Just a second. Just a second. It's coming. I promise. I promise. Forgot I changed that. Let's look at the HODL. This might be a letdown. I forgot I refactored a couple things and it's changing. Did this pull through? Come on. All right, here's an interesting one. Short term is boosting. I know you don't have price on this, but again, when you have more short-term UTXOs relative to long, all right, so this is everything under a year. UTXOs under a year, younger UTXOs are the majority of the UTX, not the majority, but you can see the bump. Price spikes, right? Just for fun. I know you don't see the price here, but it did. It did here, right? It did here, it did here. And interesting, the last pull that I just did, whoop. It's always a day late, this, but whoop. Maybe that's the sign. to get everybody excited again. It's kind of funny. Yeah. I'm trying to figure out which one compressed. I guess it's a year to 2 years. Yeah. It's number one. That one's slightly down. These guys moved to new investors in the last couple days. 1 to 3 year hodlers. Three to four not. 1 to 3 year hodlers went down. Everybody above. Everybody from 1 day to 1 year went up. Really 1 month, actually. So there's the sign. So we'll see. Maybe we get that pump. Whether we get a pump or not, again, that's not the point of generally what I'm doing here. Just trying to show you guys the statistical backing behind a lot of what's happening. And as Kurt said, that's I think this is a good way to look at it. All right, so from until the end of the year, 80% chance based on the history of the power curve. And you do have to say the power curve. It's not an exponential curve. So we are putting some, what's the word? I don't want to say we're putting faith into it, but we're looking at the numbers. We're seeing that this is the best fit of a curve. And 80% of the time, we could say that price would not be expected to be below 80K by the end of the year. 90% of the time, 72K, and this is going to be quite a bit lower, 58K by the end of the year. And here I thought I was going to do in all these videos with you guys talking about the top percentiles. I thought we were going to be laughing and joking about how many days we'd been above this band and this band and this band. Completely the other way around, right? It's never easy. No one told you. No one should have told you it would be easy, let's say. Oh, that's cool. That's cool. I should do it too. I have that. What have you determined? This is still a couple weeks old. I'll get these more updated every day, but $23 trillion industry. Who's your Mag 7, by the way? What is Mag 7 exactly? Because I have Broadcom and Oracle to make 8. For sure the 6 are you have in there. And Broadcom, obviously, with the chips, is surging, but relatively small component of this pie. The red. Seeing what Gemini tells me. Ah, it's Tesla. Yeah. Big sigh from me there. Yeah, I guess I should put it in there, even though it's insane to me that a car company will be, considered alongside all these other ones. But yeah, I'll do it. So again, back to what I was harping about the whole video. Nice exponential trends, very strong trends, like 20% plus, whatever it is, 25, I can't remember, close to 27% since 2008 returns. And since ChatGPT, all of them to a T have gone up with this hilarious drop at Liberation Day. But all of them have gone up like gold, 40% compounded during this period. So mirroring, combining Bitcoin's market cap with those, and I'll add Tesla, and I'll probably round it off to 10. I don't know what should the 10th stock be. Let me check. I need to stay in U.S. sort of tech. Yeah, I don't want to do Berkshire. TSMC. It's not U.S. I guess Tesla. I didn't want to put Tesla in there because it's so. This is my own personal biases. Like a stock at the whims of one man who's doing ketamine. I think I'll leave it at the top 8 of these for a while. And anyway, that's a good point. Let's do a quantile regression on this for tomorrow. The ratio of these stocks to Bitcoin. It will be a power curve because Bitcoin dominates as a power curve, but seeing that ratio could be quite interesting as far as valuations go, right? Do you move into Bitcoin or do you move into the tech stocks? That's a very good point, Kurt. It's a very good point. Yeah. We'll see if I keep Tesla. If I put Tesla in. If I had to do a top 10, I guess it would be Tesla and TSMC, but that's, to keep it kind of tech-y. But Tesla's not exactly full tech. I know that Elon says it's a software company or whatever, but and TSMC would count, but that's not American. So I'm not sure that if I wanted to round it out to top 10. Anyway, doesn't matter. It's probably all I had for this one, guys. I know I had a late start. Not a huge stream, but yeah, I don't know. What do you think, Kurt? You think we're going back to the trend by year end? Trend is 125. I was literally looking forward to these streams in November, December to say, like, just be counting the days that we were above, the 9, trying to get these interesting little statistical patterns. And as I said, Whoever told you it was going to be easy was lying. But it is kind of easy if you just zoom out. If you zoom out, it's quite fun. There you go. 80% confidence says we're above 80K by the year end. Yeah. You're right. You're absolutely right. 95 is the crucial area. I got to get some more charts on that. CoinGlass has a heat map for free. I'm sure you guys have seen it. This is on Tether. They have a ton of different ones. This is Binance. Tether. Hold on. This is quite a nice, if you want to really get the short term of it, it's quite a nice little chart they put out for free. All right, so huge losses here. But if you want to see more stuff, here's the 95. Actually, we need to go even further out, don't we? Huh. Everybody got taken out there. It's not as helpful, actually. Probably need more of a subscription to see this better, but most of the leverage was taken out here. Back in start of October. I remember this day. 16th, right? No, 11th. I haven't looked at this in a while. If I'm reading it right, there's actually not much leverage right now. At least longs. Everybody's been taken out. What's this model 2? Like the longer frequencies. But you're right, 95K is when you start to see more action. Right? And then the shorts would have to be taken out really at even levels way up here, 135. Big vacuum here. Yeah, I think that's a total plausible scenario. It seems very unlikely that we have these big moves down within the next year. You know, never say never, but if we have even been barely above the OLS this cycle, that is the black line here, right? Just barely above it. It's very hard for me to see that we just keep puking lower and lower. You're going to find a bid, especially with Wall Street. So yeah, some leverage now building up here at 74. Longs get taken out. And lots of shorts up here. But these are like way high numbers. It's an interesting heat map. They offer it for free. Just search CoinGlass Bitcoin heat map and you guys can find it. I think the trade now is tech and gold, basically. That's where all the money that could possibly go into Bitcoin is. Of course, there's some small business owners or whatever, BTC Treasury Co's, but this remains a very interesting. You know, I should put this on a oscillator. You know, the very young ETF industry for Bitcoin. We're 1/5. We're probably at the best we were 1/2 or 1/3. But gold has soared. Another interesting metric would be the ratio of this to the outstanding supply. Okay. So very roughly, gold is 23 trillion right now. So it's 2%. And what is Bitcoin? 1.7? Let's just call it 17.11 divided by 1.7 trillion, 6%. So actually, we're overrepresented compared to gold, interestingly, by 3x. I should put that up. Percentage of the estimated total gold holdings, total gold market. How big is the ETF market? Gold is actually 3 times higher than Bitcoin, which is interesting. All right, my friends, I think that's going to do it for me today. Hopefully tomorrow I'm more on time. Yeah, we'll keep on with this idea. This is a totally sound statistical way to look at it. Bitcoin moves in power. All right, it does not move in exponential. You don't even need a stats background to understand the numbers look wacky, trying to shoehorn an exponential analysis onto Bitcoin. And by design, a lot of these TA analysts, whether they know it or not, if they're drawing straight lines on log scale, that's not going to track over the long term for what Bitcoin is, what it does. And it's a very rare thing to find a financial asset that looks like this. All right. So that is the stream. That is the lesson for today. Thank you all for watching, as always. Thank you, Kurt, as well, for the engagement. And Bitcoin Polska, everybody else. Take care, guys. Talk to you tomorrow.